Hi, this is Dr. Meena. In this video, I am going to explain how to prepare a contract account when a contract spreading over 2 or more years. Watch out the previous videos on contract costing to have more clarity. Let's move on to the problem on preparation of contract account when the contract spreading over 2 or more years. Look at this problem. The following informations relate to a contract for rupees 7,50,000. The contractee paying 90% of value of work done by the architect rest on the completion of the contract of Murugan Construction Company. Look at the information. The informations were given for 3 years for 2007, 2008, 2009. We have information about the materials, wages, direct expenses, indirect expenses, work certified. Work uncertified is given only for the year 2008. Plant is given for 2007, that is 10,000. This 10,000 we need to use it for all 3 years, but the value of the closing plant will be different for each year. We need to calculate the value of the plant at the end of 2007, 2008, 2009 was given here itself 8,000, 5,000, 2,000 respectively. Prepare contract account the 3 years in the book of Murugan Construction Company. Now look at this contract account. First, I mentioned for the year 2007. This is the way how you can prepare a contract account when you have the problem that contract was spreading over to 2 or more years. So I mentioned the first year as 2007. As usual, contract account has debit and credit side. Debit side will debit all the expenses as per the problem. I debited materials, wages, direct expenses, indirect expenses, and then plant. And I started the year 2007, the value of the plant was 10,000. And in credit side, by plant at site, here it was mentioned here at 8,000 as per the problem. Look at this line. The value of the plant at the end of 2007 was how much is mentioned in the problem? 8,000. So same thing I credit over here. By work in progress, as per the problem, the work certified is given 1,75,000. The same time I credited here. So when I compare the debit total with the credit total, I'm getting balancing figure on the credit side. That means it was a loss. So during the year 2007, when I carrying out this contract, I incurred a loss of rupees 7,000. So it was a loss. So therefore, the entire loss has to be transferred to P&L account only. And then the total for this year, 2007 contract account was 1,90,000. And I will move on to the next year, 2008. On the year 2008, the first thing I know it to brought down the balance of work certified and the plant. So the last year work certified balance was 1,75,000. I need to bring it over here. And the plant, likewise the plant, what is the plant at site for the last year? I need to bring it at the opening, like opening stock. So I need to bring it over for the year 2008 on the debit side. And debit the remaining expenses for the year 2008, which is given in the problem. 2008, the materials value is 1,10,000, wages 1,15,000, direct expenses 12,500, indirect expense 2,000, work certified 5,65,000, work uncertified also given. So based on the information, I debited all the expenses on our credit side. That is, plant at site was 5,000. That is, closing value of the plant at site is given in the problem itself as 5,000. That amount only I brought it over here. So by work in progress, I mentioned both work certified as well as work uncertified. And then look at the continuation in the next page, year 2008. So when I totaling on both the sides, debit and credit side, I'm getting more on my credit side, that is 5,80,000. So the balancing figure on the debit side always for the incomplete contract as mentioned as notional profit. So notional profit we calculated as 1,57,500. Once we got the notional profit, the next calculation must move on to the how much of this notional profit will transfer to P&L account as well as will transfer to reserve. So in this P&L account, I mentioned 94,500 and reserve is 63,000. So how I calculated, look at the small calculation which I mentioned under the slide working notes. Calculation of profit transfer to P&L account. The contract price as per the problem was 7,50,000, which is always assumed as 100%. So work certified as per this year is how much? 5,65,000. So what is that percentage we need to calculate? That is coming as 50%. How I calculate means 7,50,000, which is the contract price that is always assumed as 100%. So 5,65,000 work certified is equal to question mark. So have a cross multiplication, you will get what is the percentage? 50%. So out of the 3 golden rules, we need to apply the third golden rule because the percentage is 50. So what is the formula to calculate the profit transfer to P&L account? Notional profit into 2/3 into cash received divided by work certified. So what is the notional profit as per the 2008? That is 1,57,500. So that amount only I mentioned over here, 1,57,500 into 2/3 into cash received 5,08,500 I mentioned 5,65,000. How I got the cash received as per the problem means, look at this calculation which is mentioned in blue color. Calculation of cash receipt. For each year, the contractee was paying only 90% of the work certified, which is mentioned in the problem itself. Just look at the problem, the second line. The contractee paying 90% of the value of the work certified only is given. So based on the information only, I mentioned over here, for each year, the contractee was paying 90% of the work certified. So 100% of 5,65,000. What is this 5,65,000? That is a work certified. So each year, as per this problem, the contractee is paying 90% only. So for the year 2008, the work certified is 5,65,000, which is 100% means what is for 90%. So have a cross multiplication. I found the cash receipt. So this calculation I made it here for to knowing the cash receipt. So cash receipt 5,08,500 divided by 5,65,000. So what is the value of profit transfer to P&L account? 94,500 out of 1,57,500 means what is the reserve? 63,000. So first I made the cash receipt calculation and then what is the percentage? Then applying in the formula to calculate what amount will go to P&L account, what amount will be kept under reserve. Now look at that. To P&L account 94,500, to reserve 63,000. So out of 1,57,500, P&L account transfer is 94,500, reserve is 63,000. So total on both the sides is 1,57,500. So next we need to move on to the year 2009. So as usual, we need to bring the last year work certified and works uncertified under the heading work in progress. And what is the planted side? The closing stock for the previous year will become a opening stock for the next year. The same concept I brought it over here. So what is a work in progress? And then work in progress, work certified plus work uncertified 5,75,000. In case any reserve you created last year means, so bring the reserve over here, deduct the reserve. So 5,75,000 minus the reserve of the last year. So what is the balance? 5,12,000. So this is the thing you learned in this video. Whenever we are going to prepare a contract account for contract which is spreading over 2 or more years, what we are supposed to do on the debit side of that particular year when we are transferring the work in progress from the last year. So this calculation we are supposed to do work certified plus work uncertified and look at that previous year, is there any reserve? Bring the reserve here and deduct and find the balance. Then as usual, what is the planted side? That is plant how much we posted last year in the credit side, that is a closing stock. So that will become as a opening stock for this year and debit the respective expenses. These expenses as per the problem. Material 60,000, wages 85,000, direct expense 4,500, work certified. We need to credit that amount on the credit side. So based on that, I debited all the expenses for the year 2008. Then credit side, what is the plant at site for the closing stock was given 5,000 as per the problem. It is 5,000 and 2,000 respective the plant at the end. So we need to change over here. So by work in progress, work certified 5,65,000, work uncertified is 10,000. Now look at the next page. So the closing value of the plant is given in the problem itself. That was 5,000. So once I showed the work in progress of the previous year and deduct the reserve and what is the opening value of the plant by bringing out the plant from the last year and debit the expenses. And finally, the contract is going to complete. So it's going to complete means I should show the contract price only in the name by contractees account 7,50,000. This is the only difference, and contract is spreading over to 2 or more years. So contract price only has to be mentioned the last year, the name by contractees account. So when I am checking the total of the debit and credit side, the credit side is more 5,000 plus 7,50,000, 7,55,000. Then the balancing figure is 82,500. Now look at the thing. I didn't mention two notional profit. I mentioned only two profit and loss account because the contract was over. It was completed. So entire profit will transfer to P&L account. So this is the way how we will prepare the contract account. Look back, debit all the expenses, and then credit what is the closing stock. Closing stock is plant at site for the year 2007 is 8,000. Work in progress, work certified only is given. So when I'm totaling, I'm getting loss for the year 2007. This loss will straight away will go to P&L account. And the next year 2008, I brought the closing plant of the previous year as opening plant, and the closing work in progress of the previous year as opening work in progress. So work in progress 1,75,000 and debit the expenses amount which is given for the year 2008. And then by plant at site as per the problem, I mentioned what is the closing value of the plant, and work in progress, work certified, both work uncertified were given. So I mentioned over there. The next page, I calculate the notional profit by balancing both debit and credit side. Once you calculate the notional profit and find out by applying the working notes how much of the notional profit will go to profit and loss account, how much will kept under reserve based on this workings. So look at this workings. Always assume the contract price as 7,50,000, 100%. Work certified what percentage? If we calculate the percentage means 50% come. We need to apply the third rule. For applying the third rule, we need to calculate cash receipt, which is given in this blue column. It is calculation of cash receipt is how we will calculate. 5,65,000 I mentioned as 100%. What does this 5,65,000 means? That is what is the work certified 100%. So 90% is the cash receipt, means 5,08,500 is the cash receipt, because the information is given in the problem is every year the contractor is paying 90% of the value of the work done by the contractor. So based on this only, the work certified for the second year, I mean 2008 is 5,65,000. Out of this is the work certified means 5,65,000. From this 90% only the contractee is paying to the contractor, means what is the cash paid by the contractee to the contractor? 5,08,500. That's what I substituted here. I mentioned in the star mark, which I did the work notes over here. So what is the profit transfer to P&L account? Out of this 1,57,500 means what is the reserve? Then once you calculate the reserve and P&L account and close this year, then prepare the contract account for the next year, year 2009. Bring the work certified, work uncertified the previous year, and if you have a reserve for the previous year means deduct the reserve from the summation of work certified and work uncertified and get the balance. And what is the value of the plant at the last year will be a opening for the year, and debit the expenses. And look at that, the item on the credit side, closing plant for the last year was given 5,000, and contract price, this is the only thing you need to note down. The contract price only we need to mention for the contracts spreading over to 2 or more years. That is the name of contractees, because it's the last year the contract is going to complete. So we are getting profit. The profit is to be mentioned as a to P&L account. So this profit and loss straight away will go to the P&L account, and then reserve we need to mention here. So I think you understood this problem, how to work out a contract account where the contract is spreading over to 2 or more years. So look at this working notes for doing the calculation. So thank you for watching this video. If you want more videos, please subscribe, share, and comment. Stay home, stay safe. Thank you.